Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Wednesday. It's November 23rd. It is the busiest travel day of the year, from what I understand. I'm in my holiday mode. I got my holiday hat on. I've got some feedback. People said I look younger. I'm going to take that for all it's worth. I'm going to ride that one. But thank you guys. And if you guys are enjoying these videos, if you guys are getting value out of these videos, please post some comments, some feedback. I really appreciate it in our Wealth Press YouTube channel, which is where you could find these videos nice and early at about 8:30 in the morning sometimes. So it's about 7:50 in the morning. The market's going to gear up to open about an hour and 40 minutes from now. And as you can see here, the Dow is barely up. The NASDAQ is up. All right, nothing really beyond random. That's just random noise. Now, today is a big recipe for disaster, and I'll tell you why. There's not a lot of market participants out today for obvious reasons. It's Thanksgiving holidays. People are traveling. Markets are closed tomorrow, and on Friday, it's a half day. So the Fed, in their infinite wisdom, we all know how they use common sense all the time. They decided to have all of the reports for the week, the big reports today, right? When markets don't have a lot of liquidity, when moves are exaggerated, when there's big spreads between the bid and the offers. Why not? Why not make it even harder for investors? Anyhow, I'll get into each of these in a few minutes, but there's a lot of data on the table, and most of it's coming out at 10 o'clock or earlier. Matter of fact, two of them are coming out before the opening bell, about 40 minutes, give or take, from now. And I'll give you an update on that in a second. So first of all, let's talk a little bit about news, and then we'll get into the nitty-gritty. So three major benchmark indices finished the regular session higher yesterday. It's a big surprise. The U.S. S&P 500 closed at the highest level in 2.5 months. Folks, don't get suckered into this. Really, Jeff Bezos came out yesterday and said the economy's in a horrible position. Investors proved optimism and easing inflation pressure and prospect of smaller interest rate increases for the U.S. Federal Reserve. Yeah, I'm not holding my breath for that one. In Tuesday's session, Best Buy, which we'll talk about quite a bit today, shot up nearly 13% after the retailer lifted full-year guidance and expressed confidence a ramp up in deals and discounts would attract more customers. Yeah, I'm not holding my breath for that one. Did you guys get the info from Target? They're ahead of Best Buy's. They're saying there's a huge glut of supplies, especially electronics from last year, just sitting there. Energy stocks closed higher after 2 sessions of declines as oil prices continue to rise after Saudi Arabia said OPEC was sticking with output cuts. There you have it. So again, these rumors are very, we took advantage of them and made some money. That's all I'm going to say. Cleveland Fed President Loretta Mester reiterated on Tuesday that cooling off inflation remains critical for the central banks, supporting a smaller rate hike in December a day earlier. Kansas City President Esther George said Fed might need to hike interest rates to a higher level and hold them for a longer. My head is just spinning right now. The spotlight of Tuesday's trading session is going to be the Fed minutes. That's going to be very important. The report will be closely watched for further clues is on whether they're going to go to 0.50 or 0.75. And remember, as I said yesterday, the odds are now 72% that we're going to go 0.50 and about 28% that we're going to go 0.75. So again, we'll see if the 0.75 number increases or decreases. Investors are going to focus on U.S. durable good orders, which are at negative 5% month to month. Economists see the October figure going up 1% month over month. We also have, as I said, there's a busy day today, Consumer Sentiment Index. Economists foresee the stand at 55 compared to previous number of 54.7. It'll be very interesting to see how the sentiment comes, especially in light of the minutes. Building permits and new U.S. home sales will also be closely watched. They're looking at 1.526 for the building permits, and new home sales come in at 570,000. I think that number will be a little bit lower. And we also have jobless claims. This is really a non-starter because the numbers have been right in line with the 4-week moving average. So there's really nothing nefarious about the job market's been actually pretty good. S&P Global released PMI preliminary numbers. The PMI is expected to stand at 50 and services at 47.9, Last but not least, crude oil inventories. They're estimating figures to come in at negative 1,055,000 compared to last week's value of 5.4 million. Boy, if that wasn't enough, euro markets, they're up very, very slightly, boosted by stronger PMI reading in the region. And at the same time, investors are digesting new COVID restrictions in China. I don't even understand why the market's rallying on that. Asian stock market today settled in the green, tracking recovery. Shanghai's composite closed up 0.26 while the Japanese markets closed lower. And in terms of the Chinese situation, they closed higher as market participants wait more cues on U.S. monetary policy. However, and this is a big however, COVID cases in the country limited the index gains as traders feared more disruptions. Now, honestly, I don't understand why the market's brushing this off, but here we are. So, some more news. On the earnings side, I wanted to give you a comprehensive report. We're looking at Deere. Deere sent shares higher by 5%, reporting profits that topped expectations. I expected that to happen. HP shares were up 2% after the company announced plans to reduce its workforce by about 12%. Ouch. That's huge. Nordstrom shares dropped 9%. We were expecting that. There's no way people are shopping at Nordstrom's a lot right now. My wife and I actually went there a few weeks ago, and it was pathetic here at the city center. Autodesk shares were down also about 10% after the company cut its outlook for billing cash flow, citing less demand for multi-year upfront and more demand for annual contracts. That's a huge company. That's very, very important. But the market is shrugging it off. Now, in terms of the overall market, if you look at the SPY, which we're looking at right now, the biggest factor will be, will the S&P 500, and we're looking at the SPY, will it reach and pass through the 50-day moving average, which is at the 4,000 level? Now, the Dow Jones, and I'm really skeptical, and I think this is the biggest sucker rally I've ever seen. And notice the divergence here. The Dow, I believe, is topping out. Now, I know I've been saying that for quite some time, but folks, it would be very hard to assume that the Dow has more upside and can continue trading above the 200-day moving average when momentum levels, and I want to show you this, when momentum levels on the Dow look like this. Look at the 50-day line. You tell me how continuous this is. Here, I want you to see exactly what I'm looking at, and you tell me how much more upside the Dow has. This is where we're at right now. This is the last 20 years of data. Do you think the Dow has a lot more upside? No. And to make matters worse, you have only 50% or 51% of the stocks in the Dow trading above the 200-day moving average, which leads to a lot of vulnerability. The S&P 500, folks, is not doing all much better. It's right there at that resistance level. And I'm expecting after this week, this is a very non-committal week where you have a lot of retail traders trying to take the market higher. Institutions are going to come in and sell the living crap out of this market next week. Also, if you look at the bond market isn't really going higher on a daily chart that much anymore. Looks like it's peaking out around here. See that? It doesn't look like it has that kind of momentum going. And on the RSI, it's getting up there as well on the 10-day RSI. So in my opinion, the market is rather limited. Now, today is Wednesday, and I know it's a holiday, but on Wednesdays, I always give you my one long, one short. Well, for the long, Marathon Petroleum. We had a little downside selling pressure in energies. They were talking about lowering inventories. OPEC was talking about about increasing production. I don't know. I don't think any of that is going to come through. I think Marathon is going to continue moving higher. I see a target of about $34 in the next few weeks. And to the downside, oh boy, Best Buy, folks. Now look, Best Buy had better than expected earnings. It's been in a downtrend all year. If you guys really think that this stock is gonna all of a sudden turn around and start making millions in this economy when technology's in the crapper, I've got some ice cream to sell you in Alaska in January. You know what I'm saying? Come on, let's be real here. So I'm looking to sell this stock. I'd be buying right now puts. Let me tell you what I'd be looking at right now. I'd be looking right now probably at the February puts right around right around the 75, 72.50 strike price. I really like this right now. I may initiate this in one of our programs because I don't think this stock has more upside to go. I think this is about as good as it's going to get. And I think in the next couple of weeks, we're going to see some selling pressure come in on this stock as well. Now, folks, before I let you go, and you got to be really careful because we're going to have a lot of data. Look at all of this data on the table today. A lot of data and very little liquidity. So, folks, this is big, and I want you to pay attention. I'm going live today with Celeste Lindman. That's right, at 1 p.m. Eastern Time. Celeste, she plans to pull the curtain behind her brand new strategy, and this is going to be a good one. It goes back to the Great Depression. This market pattern, this market trend has been happening since the Great Depression. We're going to talk about how the pattern has remained true through some of the most turbulent times in history, including World War II, the Great Recession, and today's bear market. It's working in the bear market, and specific time and date, how you can use it. It's going to be all meat and potatoes. And remember, this has never been shared. It's been never shared with the public until today. So the only way to get to the details is to click the link below to register for the event. I hope to see you at 1 p.m. Bring a paper, bring a pen. This is going to be very meat and potatoes session. Celeste is ready to go. She'll be in the office with me today, 1 p.m. Eastern Time. Follow the link below. This is the best holiday education that you will get. And we're not going to tease you. We're going to give you all the details. I'm very excited about this, folks. Follow the link below. Check it out, 1 p.m. today. Bye, guys. I'll talk to you soon. Have a fantastic, fantastic Turkey Day. Don't go crazy on the turkey, and I'll see you Friday here. Bye, guys. Have a great holiday. If you're enjoying these videos, post comments below these videos. Post your questions there. I will respond. Yes, I will personally. And remember, at 1 p.m., Celeste and I, it's all being revealed. Follow the link below. This new trend strategy she's got, this pattern, it is hot. Follow the link below. You don't want to miss it out. It's good watching for the holidays. Bye, guys. Have a great, great, great day.